This is Scott Becker with the Becker Business Podcast and the Becker Private Equity Podcast. We're thrilled today to be recording with producer Grace Lynn Keller, brilliant producer. Thank you for joining us today, Grace. Today we're going to talk about 8 stories that we're following today. We're going to give a quick prescript before we jump into that. The big prescript today, the introduction today is the markets are relatively flat early. We're almost midday today. The producer price index came in June really flat, which was a really positive indication for the markets after CPI for June, the consumer price index, was elevated. So both those things are good news and leave us with a little more comfort that the Fed still can reduce rates sometime this year, nowhere soon because CPI was up, but PPI was soft to down. The third sort of intro story we're following this morning is the big banks and trading firms, Goldman Sachs, Morgan Stanley, Bank of America, all reported really good earnings for the quarter. So that's our introduction today. Now I'm going to go through 8 quick stories that we're following. First, 5 well-known companies took it on the chin yesterday. We always find this fascinating. Maybe it's a part of Schadenfreude, but here are the 5. Encompass Health dropped 10.3%. RH, the furniture retailer, dropped 7.57%. BlackRock, the huge money manager, dropped 6%. Whirlpool dropped 5%. And finally, Albertsons also dropped 5%. BlackRock, the world's largest money manager, now has 12 trillion plus in assets under management. It released earnings, and what it found was that even though its assets under management are growing, its expenses grew more than expected. Third, we'll note 3 stocks that give us FOMO. And these are Palantir, up 98% year to date, Hims and Hers, up 108% year to date, and Bitcoin, again, just knocking out of the park, past 120,000 this week. We'll see where it lands. Third, I am relatively active on X. I find it to be gamified, interesting, a stupid use of my time, all those things. On X, you would think if you're not the perfect physical specimen, if you're not the perfect entrepreneur, there's something wrong with you. What I have found is that the reality is that most of us benefit from a regular job, and it's not entrepreneurship or bust. Myself personally, I've had a regular job for a long time. I've been an entrepreneur too. The regular job, the relationships, the colleagues, the structure, the stability is so important to my sanity. This concept that somehow or another it's entrepreneur or bust is just wrong. And I think that for so much of our world, we really thrive from having a job, a regular paycheck, a regular income, and the structure and routine that comes with it. So that's our thoughts on that concept that is so riveting and so discussed often on X. Fourth, Stellantis Jeep. They are dropping their hydrogen fuel cell program, but bringing back the Jeep Cherokee. This is a company that's been sort of in the woods for months, really in trouble. The stock is down 27% year to date, but we certainly applaud both of these moves. Fifth, Carvana, which used to be thought of as a smoke and mirrors company, is now up 70% year to date. It continues to move in the right direction. Sixth, mega private equity fund, Blackstone, is down 7.3% year to date, but for most of the year it's been hovering at 20 to 30% year to date. The big, bold bracket PE funds seem to be doing better and better. The mid-sized fund seems to be a little slower, though one of the ones I work with seems to be constantly raising funds, so hopefully they're doing okay. Again, they're down 7% year to date, but earlier they're down 20 to 30% year to date, so moving in the right direction. Seventh, we talk a lot in our world about mental and physical health, and we were talking about this concept the other day with part of the family and some extended friends and concepts, but I sort of view the world in 3 stages of existence, and everybody's built differently, but this is me, and I hope some people this resonates with, and I'd love to hear your thoughts. Those 3 stages of existence are stage 1, not busy, really slow, and I end up being quite depressed, and then it's harder to get going again. Stage 2 is the stage where I view it of life where we're busy, but not necessarily busy with purpose or busy with intentionality, but far better for me to be busy than to be depressed. So better to be busy than not busy between those 2. The third stage of life that I look at is this concept of being busy with purpose or busy with intention. This is as close as I get to the Abraham Maslow's self-actualization. Again, I spent a great deal of my life currently in stage two, busy, but not necessarily as intentional as I'd like to be. Other times, busy with purpose. I love that. Periodically, I fall back into not busy, and that becomes boring and depressing for me. And I've defined myself out of that. The last concept that we'll talk about today, the eighth story, is private equity in healthcare. We'll briefly call this the good, the bad, and the ugly. We had published another podcast on the subject. The good in private equity in healthcare, investing in high margin growth businesses, not doing too big an income scrape, and also not over leveraging the heck out of whatever platform or business that you're buying. The second thing, the bad is investing in lower margin specialties, adding debt on it, and finding yourself really squeezed. And we see a lot of that. The third, the ugly, is killing the company with too much debt. Again, we saw this with Steward Healthcare, the hospital chain, 30, 34 hospitals. They essentially went broke as the private equity fund overdid the recaps, left a low margin business with a lot of trouble. Again, these are 8 of the stories that we're following today. Thank you for listening to the Becker Private Equity and Business Podcast and the Becker Business Podcast. Thank you to Grace Lynn Keller, our producer, for being with us today. Thank you very much.